Good afternoon to everybody. Thank you for joining a panel right after lunch. So this afternoon, we would like to discuss over the next 60 minutes. We will talk about innovative financing models for CNI. Now, we all know that, Kenya has very grand plans to scale a resilient economy, green transition, and very big plans to do this by the year 2030. And a big component of this is going to be CNI, captive CNI. And this supports round about 60% of Kenya's peak installed is going to be CNI users. So it's really important that we help the transition by ensuring that CNI is well financed. On the panel this afternoon, I have, a very distinguished set of ladies and gentlemen across various fields, financing, arranging financing, academia, and they will help us to unlock what is the current state and how do we get from where we are right now, which is about 400 megawatts to about 1,000 megawatts in 2030. We have big challenges that relate to cost. We have big challenges that talk about products enhancement, but we're going to talk about that. Chris Olobo is my name, and I am the CEO of Dhamana Guarantee Company. And at Dhamana, our mission is very simple. We would like developers in the CNI space to have local currency financing, okay? Now, we think that's important. Right now, I'm sure when CNI developers approach banks, they'll be asking you for lots of security, the tenors are very short, and the interest rates are high. So at Dhamana, we are AA rated. So we then use our guarantee to enable developers attain better rates of financing, to enable them get financing that will be without the need for collateral, okay? And not just finances like banks, but we also support pension funds. So we do know that right now in Kenya, there's a very big need to have pension funds support transmission lines, for instance, right? So how do we help pension funds finance Ketraco projects? And we'll be happy to talk about that. But all right, so why don't I pass it over to the panel? I will give them each maybe 2 minutes at the most, introduce yourselves and tell us how you play in the ecosystem of financing in the CNI space. I will start with Linet.
Good afternoon, everyone. My name is Linet Karume, CNI Sales Manager in East Africa for JA Solar International. And I know you're wondering how does an OEM play into the financing, right? So unfortunately, we are not necessarily financing directly, but I'll be explaining ways in which we are not only ensuring that the CNI sector is being supported, but also technically we're ensuring our panels are bankable to ensure that the projects that are deployed with JA solar modules are reliable, efficient, and they have long-term reliability to produce power. So thank you so much. I am looking forward to a great session.
Thank you very much. My name is Mark Hankins. I'm representing Get Invest Finance Catalysts. What we do in this sector is we connect entrepreneurs who are seeking to raise investment and grant capital, mostly investment. So we are a EU funded program, and companies apply to Get Invest online, and we provide them with a free, no-cost advisory service to help them identify the investor that best meets their needs. We work with 300 different investors, and right now Get Invest has 200 clients. My relationship to C&I is we work with renewable energy companies exclusively. And I have 5 C&I companies, and we've helped them to raise finance for their individual projects and for operating capital. And look forward to talking more. Thank you.
Hi, I'm Aymeric Tregout. I work for Finer Green. So Finer Green is a financial advisory company in mergers and acquisitions on fundraising, specialized in renewable energy. So it's a company which has 14 offices in the world, on 3 in Africa, Abidjan, Nairobi, and Cape Town. Myself, I'm based in Nairobi. And so basically we help clients to raise money either at corporate level, project level, for debt on equity. We work in particular with some CNI clients across East Africa, Central Africa.
All right. Good afternoon. I'm William Murithi. I work with Strathmore, based at the Strathmore Business School. Introducing myself, I feel like I'm the odd one out here, but I wear many hats. Specialize in strategy, entrepreneurship. So work with entrepreneurs directly. Consultant in that space. But today also I wear a different hat. I'm the country lead for. It's called CEPREC. It's a circular economy powered renewable energy systems. It's a multi-stakeholder project that has been funded by UKRI, and we are looking at circular microgrids, particularly converting lithium batteries to help us with storage of power, solar energy, and all that. This is funded by the UKRI, as I said, involving different partners across 6 African countries. And we've just kicked off the ground. So we are looking to do a lot in this space. At Strathmore also, we have the Strathmore Energy Resource Center. I think my colleague is around. It's one of the conferences dealing a lot with capacity building and also research and innovation in the space. So I'm happy to engage in the conversation. Thank you.
And I'm going to pass it over maybe first to Mark. What is the current state of financing for CNI in Kenya?
CNI has only been around for 5-6 years in East Africa. My company, African Solar Designs, did a system in 2012, 60 kilowatts. We thought that was a big solar system. That was one of the first grid connect systems in Kenya. And between 2012 and 2018, we were like a surfer waiting for the wave with our surfboard, and the wave didn't come. The business really started, I think, after Linet joined JA, because after 2018, so I'm just trying to say, what is the status? So between, say, 2020 or even 2021 and this year, we've seen 300, 350, I would say even more megawatts, because I don't think EPRA has kept capturing all of the C&I solar that's being done. So we've seen 350 in 5 years, which is considering the relatively small size of this market, small. What's the state of the financing? So you can look at the consumer, and you can look at the and we're gonna have another questions about that, but the consumer and the company. Most consumers are having their financing done by the companies. So what is the state? Well, most of the 20 or so C&I players, there's more than that, but the major ones in East Africa and Kenya are providing finance for their customers. So that's the state of that. And so they can go to the customer. And then the financing for the companies raise their funds through working capital loans and through equity. And I think, so what is the status? I think right now you're seeing hundreds of megawatts of installations per year, and it's mostly financed by the C&I companies, and they are using agreements, which we'll come back to with their customers.
If we stick to that, sorry, Mark, right? So the companies are financing companies are financing the customers. Is that adequate, or we need to broaden it? If it's working, then we don't need to change that.
Okay. we can divide the market into different types of systems. So if you look at the whole solar market, on this side you have what we call PPA type projects. And those are like Garissa 20 megawatt, 60 megawatt solar project that's done one deal and they have a deal with the government or with Kenya Power. That's the biggest size. And then you have C&I, which is then everywhere from 2 megawatts down to 50 kilowatts. You don't have many below that. So the financing, are the financing needs met for that? I think for the large systems, most of the big players, most of the big companies that go for that have the financing available. However, when we start talking about smaller C&I projects, the companies are less interested because they're small, and the companies that want the solar systems don't have the cash, and they can't. It's very difficult to get a C&I company to come and give them to pay for that. They give them an agreement. So the answer to your question, is it well served? We need commercial banks to come in. We need other players to come in. We need new business models for smaller players to start dealing in that. Davis Shirtlift just deals in cash. So answer your question is, it's underserved. Long answer.
Maybe just to comment on that, I think in general, companies, even small ones or large ones, even for larger projects of 5 megawatt, in general, I think companies don't want to spend time or spend money on something which is not their core business. So basically electricity. They don't want to use their balance sheets to finance something which is not their core business. They don't want to take as well any risk on, for instance, if in the end they need less electricity consumption in 5 years, but they made a big investment or something. So that's why I think in general, they want to externalize all this service to an ESCO. And that's why I think ESCO are working that well. Then there is a topic regarding ESCOs. How do they finance themselves? So it depends on the size of the project. For like 10 megawatt projects, they will be able to get a financing dedicated just for that project. But as we can see, most projects right now, I mean, now it is growing bigger and bigger in Kenya, but it's maybe 1 megawatt. You won't get a financing to the bank for 1 megawatt. You can do that, but it will be quite costly. So what ESCOs do more and more is like they front with equity and then they refinance a portfolio of maybe 10 megawatt of 100 projects with the bank, on maybe every 6 months, they just draw a line collateralized by these projects. Yeah.
I'll just ask a very quick question on that. So you front this with your own risk capital, and then you look to refinance it with debt. Mm-hmm. Are they able to get this risk capital locally, or it's going to have to be equity that is cross-border coming in from outside? And if that's the case, then we will struggle to see local developers adopt models like that.
So what we see in general, it's especially like hard currency. In general, companies try to match their revenues, their cost on their debts in the same currency to avoid currency risk. So what we see, what we see right now, it's more hard currency. Yeah.
Okay, maybe let's pass it on to Linet as an OEM, and maybe the issue I'm trying to struggle with, Linet, right? So we've all talked about the supply side, demand and supply. Do you think as an OEM you have solutions that support on the off-taker side that will inevitably, help this ecosystem of financing?
Okay, thank you, Chris. So when it comes to OEM, generally how JA Solar was interacting with the African market before, let's say 2024, right, was through direct sales with EPCs and distributors, right? So then in 2024, we decided that who are we making these panels for? The off-takers. So we want to have a relationship with the off-taker, and that is actually my docket, developing a solution for the off-taker. And now coming to the off-taker, you find that solar solution are definitely attractive to them. However, the uptake cost is pretty high, right? And they also still want to maintain their cash flows and everything. So among the duties that JA Solar has taken is educating our off-takers on the financing models in the market, and also trying to renegotiate for them with the partners that we have. As Mark has said, with financing in the CNI market, you find that it's the EPCs. It's a EPC stroke developer. You find the developer has an EPC. So they'll come in and offer the solution and also construct for the off-taker. The other thing JA is doing is making sure that we technically support the EPCs to make sure that these solutions are bankable, right? And then we ensure that the modules that we are producing have high efficiency, because you find that you can have a solution today with panels that are not tier 1, and degradation will be very high. You find that in the next 2-3 years, the panel is producing at 50%, which does not really make much sense for the financier and also to the off-taker, because they are being billed, right? So that is how we are supporting the market. However, we are hoping maybe in the next 2-3 years, we can also be able to offer some sort of financing directly to the off-taker to enable off-take of these solutions.
Thank you, Linet. But maybe if I just ask you, do you have any practical examples you can talk about?
In regards
what you have
to
done, yeah.
Us as JA?
Supporting exactly. How JA has supported an off-taker.
Okay, yeah. So we have, I don't know if she's here, Katumbi. Don't know if she's left, but she's from New Southern Energy. We are, yes, there she is. She's Katumbi. New Southern Energy. So we are doing a project with Mufadal Glass along New Airport Road. And we actually developed that client, then brought in New Southern Energy and assisted in negotiating for the client and getting them to have the best deals. And actually, we, as JA, we brought in several EPCs. So it's not like we are targeting only one, but NSC were the best. So in a way, as an off-taker in the market, you might not know all the players, right? You might not know which players are more favorable to particular manufacturers or particular processors. And in that way, we are here to support the industry. Yes.
Thank you. Thank you so much. Mr. Daktari, we will not forget you. So I'm going to read some statistics for you, and then let's talk about it. So last year, a 50 megawatt solar plant, right, typically would avoid 50,000 tons of CO2 per year, okay? And that can earn you anywhere between $200,000 to $300,000. That's a 50 megawatt solar CNI, which I think is a good thing, right? And then last year as well, there was a green bond of about $40 million that was used to finance a $30 million solar plant. And there are plans to do this, to move this from 30 to 100 megawatts. So we're seeing cases where carbon credits, can be used as third-party revenue. And in cases that could actually become the main revenue. And then on the other side, we're also seeing the same projects that could benefit from carbon credits also being financed in a very sustainable way using green bonds. So, as the academic, let's have that academic heart. Do you think this will provide a future for CNI financing in Kenya?
I think from the statistics itself, it talks a lot in regards to how financing of CNI should be, or should be arranged, or should be designed. And just as what you mentioned previously, talking about circular economy practices in regards of what we do. So my thinking from that perspective, yes, I think this is the way to go. And Africa stands to benefit a lot because, again, traditionally of our practices. I was in a forum, I think last week on Friday, and someone just had to take us back to how we traditionally would do things. Look at drying, probably crops, maize involved, the use of solar energy. I mean, it's something that we did, right? But however, again, it was not very efficient. Now we're finding ways to efficiently do that. And if that probably can also lead to ability to harness the carbon credits and find ways to finance it through green bonds, I think for me, is the way we should be looking. One of the things that I'm critically looking at, particularly for this research project, in as much as we're trying to build a technology around lithium batteries, we're also looking at how can we create business models that allow us to tap in the carbon credits and also attract funding that can be able to scale this to build renewable energy systems that can also be part of the solutions that we're seeing. So for me, from that perspective, yes, 100%. And I think even the industry, the way it should be thinking about it is to try and see as a lot of this is being communicated. And one of the challenges, I think I was also involved in a project. We were doing some assessment in Amboseli, and there was an organization that was trying to bring in the concept of carbon credits to the local landowners. And for me, I think the way it was being translated is a bit more difficult for them to understand. How do you tell a Maasai elder who has acres of land that they need to wait a period of this month to receive $3 for what an acreage in terms of soil carbon capture in that sense. So there's a lot of that, but it requires a lot of capacity building, a lot of information that is out there, and being able to translate that to the practices that we do so that it doesn't become very difficult for us to translate to harnessing carbon and finding ways to finance through green bonds.
Do we have, Dr. Do we have the regulation in place for carbon credits? I know
in as much as my knowledge goes, I know I've had interactions with the Ministry of Finance. There is development of a green bond that is in place. Carbon credit itself, I think, interesting. I'm reflecting back around 2012 when I joined a company called Africa Carbon Exchange, which was trying to really leverage on whatever was happening internationally in terms of carbon credits. I think then company did not do very well. It had very good backing with people with investment knowledge and financing knowledge. Some of them who set up the likes of standard investment banks. But the problem of it was, I mean, of course, the market crashed because, again, the willingness to build traceable as well as accountable systems in place was not possible. I think, as far much as I'm concerned currently, I have not come across in Kenya, but probably in the offing, that's something that should be working
I suspect
towards.
Mark has something to say about carbon credits. Mark.
Yeah, for the players in the solar market, we're not in Nigeria, we're in Kenya, and it's different. Why? Well, there's two types of carbon markets. One is carbon markets that take carbon out of the air. That's like tree planting, because when you plant a tree, you're taking carbon dioxide out of the air, creating oxygen, right? So that is the type of projects that really are supported. Carbon reduction are less favorable. And how many Kenyans do we have here? What is Kenya's grid? It's green. It's very green. No coal. So it's 80-90% green. So when you make those calculations for how much carbon you're saving, you're not saving much more than 10%, 20%. So there's not a lot of carbon savings unless you're in Nigeria and you're replacing 100% generators. So I think it's really, I don't think we should be jumping up and down as solar players about solar. Back to the carbon traders are mostly focusing on carbon sequestration, which is the tree planting. And so reduction are not very favorable right now. And then the active market is the voluntary market, and the voluntary market needs you to do a deal one-to-one with another player, which is possible. Sorry but I'm not very excited about the carbon market right now for solar.
You've just dampened the spirits, Mark, right? So third-party revenue from carbon is really not going to happen for solar, at least in Kenya, because the grid is 90% green. right?
I was one of the people in the first carbon trading company in Kenya called Camco. Camco stopped, that was 2008. When the market crash happened, Camco, the price of carbon went from like $30 a ton to 30 cents a ton, something like that. So Camco went out of business. The market for carbon that are happening, it's like Laikipia, $30 million. There is a carbon market. Laikipia is getting paid to plant grass, but it's in the voluntary market. That means they probably invited somebody from Netflix and Apple and some other multinationals and gave them a nice safari and then made a one-to-one agreement. So voluntary market is one-to-one agreement. And voluntary market works, but you need to know somebody I'm joking, but you need to know somebody in Silicon Valley because you need to someone to have, or someone that wants to offset their own carbon budget. So people like Netflix, people like Bill Gates and Microsoft, they offset by projects like Laikipia. But good luck.
Okay, Mike. So let's talk about the small projects, right? Banks are typically very interested in financing more than 10 megawatt deals. That seems to make sense to banks for whatever reason. We do have these projects that are less than 100 kW. How are they getting financed? Now you've told us third-party revenue is not going to happen. So how do we get projects that are less than 100 kilowatts to get financing? Is there something we can do?
I don't want to monopolize you. You can help me, but this is so for systems over 100 kilowatts, her clients, AREA, Ofgen, Premier, Miale, my client Miale, they all love above 100 kilowatts because that's assured income. But below that, it begins to be too much trouble for them to finance those projects. So where do we go and what do we need to do? And this is something that we can talk about. We need to bring in commercial banks. So for a small project, and it could even be your household solar system, what we need is Equity Bank, NBA, African, Stanbic. We need them to step in and provide loans directly, not to the off-taker, but directly to the consumers. And they have green funds to do this, but they don't have the capacity. So the banker knows how to write a loan for a car, and it knows how to give a loan for a house, but it doesn't know how to give a loan for a solar system because there's a lot of briefcase companies out there. And so the bankers are worried that that solar system might not last. Do you want? Yeah, but so to answer your question, there is a huge market for smaller systems.
Yep.
If we could get net metering happening, that market would grow even faster. But what we need to do is we need to bring in the banks. And we were supposed to have Equity Bank here today.
Yeah, we're supposed to have Equity Bank, but I don't know.
Wamekuwa mteja.
Or maybe you told them it's 100 kW systems. But let's get some thoughts from Aymeric. What is your thought on financing, solar home systems or just the smaller systems?
So I would say ourselves in general, we work especially with companies like ESCOs or other type of companies that provide solar home systems. We don't really delve into financing really consumers, but we work a lot with financing these companies. And then there are already plenty of subjects. Sometimes if the company is of a certain size, if it's known on the market, if it didn't take too much risk, if it gave back some risk to the consumers, then the banks can be rather confident to finance this company. But if the ESCO takes all the risks, so the consumption risk, the yield risk on all these things, then maybe some banks can be a bit scared to finance. I think there is, as well as Mark was saying, I think a need for knowledge building in banks of people who are not necessarily always qualified or have the knowledge to maybe finance this project or this company. It's building more and more, but typically project finance or this kind of thing, it's real knowledge that that banks need to acquire as well.
And just to add that, right? So, I mean, the other thing that a company like Dhamana, which I lead, what we're trying to do, if we look at the solar home system, so you've got so many players and the end users are obviously very, very small, right? So how do you pull them together? And then you have a guarantor like Dhamana, provide a guarantee to basically support the off-taking of credit risk. So we think, our product should be able to help unlock financing for solar home systems down to the ultimate beneficiaries. Simply because banks do not understand the risk. If they do, they're pricing this way too high, 20-25%. But on top of that, they ask for a very, very big level of collateral. And it just makes it very, very difficult. So if we take away the collateral requirement, we should hopefully see banks get into this space, and the rates should be coming down. But let's take on the ESCO model, which I think is really great, because when we look at the last transaction you did, which was Equator Energy, right? The rates that came out of that, you certainly offer much better rates than we're seeing on the grid. So, is this really just down to your financing strategy, or you think there are other issues other than just financing that make something like this possible?
So basically, this ESCOs to accept a project, or when they negotiate, for instance, a particular tariff with a client, to say like, okay, let's go for this project. They need to be sure they will reach their equity IRR, that the required rate of return on this project. Then how they will get it? I mean, many things will come into play to determine, okay, we can go until that low price because we optimize these things on these things. Financing is a big part of it. Of course, it's a big field where we can optimize things. So try to get as high a gearing as possible to decrease the financing cost. Even in financing costs, there are plenty of things we can look at. Of course, there is the interest rates, but there are plenty of other things as well you need to look at. In particular, for instance, you have usually debt service reserves account, which can cost a lot of money to ESCOs. So this will be part of the negotiation as well with the banks, and will be able to decrease the total cost of the debt. But of course, there is not only these things that will help the ESCO to decrease actually the cost of its project and be profitable on this project, on reach its IRR. Of course, platform costs, so all the teams, everything will come into play. So what we see is like ESCOs which succeed to be very competitive in terms of price against the grid. It's companies which really rationalize all their teams, all their process to be as cheap as possible, who have very, very good negotiation strategy with their suppliers. They control well their working capital on all these things.
Okay. Thank you.
Sorry, just maybe to add to that as well is like, when I was saying like platform cost is an important thing as well that come into the price, basically that they charge to the client. An important part of the strategy as well of ESCO is to grow as big as possible the fastest, because then you will be able to amortize all the costs of your platform through multiple projects and be really competitive. Of course, when you have only 4 megawatt in your portfolio, or if you have like 60 megawatt, your team will grow, but basically a big part of the cost is also fixed cost. So at the beginning, they try to grow very fast and then to be really competitive on their prices.
Great. Thank you so much. I'm going to get to Linet, but I'd like Dr. to think about public-private partnerships, right? After Linet speaks, let's try to dive into public-private partnerships. There's a very big push for PPPs in the country. Can PPPs really help to catalyze C&I captive power? So let's talk about that. But before you do, I'd like to really to pick up on what Aymeric was talking about, and I ask you, Linet, let's park the financing aside, right? Are there other things that you think, and this could be related to regulation, or it could be support from DFIs like, AFTBs, blended financing. Is there something that you see as an OEM that could help in this space other than just, the pure financing play?
Okay, thank you, Chris. Before I answer that, I think we have Cyrus Murithi, Stanbic Head of Energy here, and Mark, he's your guy, commercial banks. Yes.
Cyrus, I think you should just come and sit here.
Come and sit down. Come here.
Linet, thank you for bringing him. Just come and sit here.
Come and tell us what you guys are doing.
You tell us what Stanbic is doing.
From the horse's mouth.
Karibu sana.
Yes. So to answer your question, we are seeing things like policy regulation, of course. Kenya has been on the forefront in terms of solar by VAT exemptions on solar panels. That is really assisting the development of the sector. I'm also really excited about the net metering, of course, that Mark talked about. And I also see a lot of potential when it comes to wheeling, right? Because we really do not have where our most industries are, especially in Nairobi, where the CNI companies are located, we don't have enough roof space. So wheeling will come in to assist in this. Other than that, having blended financing, of course, through my research, I found that when it comes to financing coming from crowdfunding, they're much cheaper in terms of interest. And I'm sure Cyrus will deepen on this than commercial banks, right? And that has been very key, a key aspect. However, from the OEM side, just strengthening on the points I'd made, what we are doing as JEA, first, we are doing capacity building. That is educating installers and also educating EPCs and also off-takers on tier 1 solutions or tier 1 modules and inverters, because that is what will assist us to move forward in this market and also in this industry, to ensure that the solutions we are deploying to the market are actually effective and they will serve us. Other than that, we are ensuring that our panels are bankable, of course, and something that we'll be doing with Stanbic soon is we are going to even be approaching the commercial bank and building technical capacity with them, so that when they are also advising their clients and these clients are coming in, they are able to get the best solutions in the market. And finally, what as JEA Solar we're doing, we have come in strongly with capacity of human resource internally. We just employed a technical and solution manager in Kenya to build capacity in terms of engineering and design for the small solutions, the below 100 kilowatts. You find that EPCs shy away from them, so they do not get the best services they can get. So we currently have a technical and solution manager that now can come in and assist in designing of these solutions, and we will find a way to bring in installers to assist.
Do you charge for the technical manager? Or
No.
You don't. So it's a service you offer.
It's a service we offer.
This is JEA Solar.
Yes.
Tell me, you talked about your panels being bankable.
Yes.
What does that mean? How does a panel get bankable?
Okay, so just simple knowledge on panels, right? So modules, as any other technology, degrades, right? So you find us with JEA modules, we say that our degradation in the first year is 1%. And progressively 0.4% yearly, right? You find that some modules will degrade in the first year, maybe 2%, and then progressively each year, maybe 2-3%. So you find that if a project is funded, maybe it's a PPA or an LOT, right? You want a module that will keep producing the power that it said it's going to produce. And that's in layman term, that's what we call bankable. So it's reliable, it's efficient, and in long-term use, you'll be able to produce the same power that you're producing from the start. Yes.
Thank you very much. So we are going to ask our friend from Stanbic, but I know we still have a pending question on public-private partnerships. So you begin to think about, because she has told us that JA's solar panels are bankable, and this is across, all sizes from 100 kW. So we would like to know, what is Stanbic Bank doing to support the CNI space? What are you doing? If you're not doing something, what are the challenges that you see as a bank that we could unlock to enable financing to move into the CNI space? So think about that as we have Daktari talk about whether PPPs can actually unlock investments in this sector. Thank you.
Okay, thank you. Very, very good question. And I just want also to widely reflect on where we are as a country, and most African countries, is that financing of critical infrastructure, whether it's roads, as to have a part of public-private partnership. Our government's resources and what we're generating is not sustainable enough to develop in critical infrastructure without having partnerships. So similar to this, and for me, my reflection is also to say that in order to de-risk some of this, and also to be able to go to where it's not economically viable for private funding or financing to go, to make it a bit more, there's a return on investment, there has to be both public and private partnership involved. And particularly infrastructure, energy. And I like your perspective, and my reflection again is, yes, we have a lot of it, 90% about renewable. However, there's also still a lot of opportunity to look at the practices that we have and what it is that we can do. And these are the areas I think we are looking to look at and seeing perhaps maybe how do we bring a mix. The project I mean is that we're looking at it from a triple helix as well, where we're getting industry at the center of it and saying, hey, and government as well, here is projects that are innovative and ways to do it. How can we get a mix of your support in scaling these projects and being able to de-risk a lot of it for us to benefit from it? So my answer is yes. And looking at where we are as Kenya, as African nations, we cannot do it any other way. It's public-private partnership. And probably knowing the high net worth individuals will be adding to the bag as well. Yeah. So introduce me to any. We are looking for one.
All right. Thank you, Chris and Linet, for inviting me to the panel. I didn't want to use that. It's a cliche, but I think when I walked in, it was at a point when one of the panelists was mentioning that commercial banks are actually not on the table. So I heard the cry and I came running. So I think I was right on time. And I think the question was being posed that there are some installations, 100 kilowatt peak type of projects that do not have anyone to fund. So as a bank, we have actually realized that we are late to the party. Considering captive solar is actually in excess of 500 megawatts. Commercial banks are actually late in the party. The ship has sailed. And the question we pose to ourselves is, how do we jump into this bandwagon and not lose the opportunity? And I was giving an example to a friend of mine. And I was telling them, if today a client of mine comes to the bank and I finance solar, and they go get an unqualified person to do the installation, So I have funded it, and then the installation doesn't produce power as expected. What will be the resultant case? So this client is likely to revert back to the grid, continue paying their power bill and running their business while I'm left with my assets. Because of that, then we realize the biggest risk that we faced was with the technical knowledge in understanding solar. So what we've done to make sure that we do develop an understanding of this technology is partner with technical experts. So we have partnered with EPCs. So when we talk to our clients and request them to consider solarization, the first thing we do is to bring in our EPC partners. They talk to the clients and they help them design an adequate system that works. We realize that it's important that we extend our scope to the manufacturers. And that is how the partnership with JA Solar is coming in. They know, they understand the technology. They know where the technology is headed and developing. And through the capacity building service that JA Solar has, then we can enhance that and extend that to our clients, just to make sure there is an understanding within the bank and to our clients on what solar is and the technology that they are actually adopting. So we do believe that that partnership will enable us to de-risk the technical risk from a solar perspective. The other risks that the banks have actually faced, and I'm grateful to say that as a bank we have actually made progress, is partnering with credit guarantee providers. Which reminds me, Chris, that we have a pending conversation that we need to close. So we have partnered with credit guarantee providers to help us reduce our credit risk from lending to solar installation. So we do believe that as much as we are late to the party, Chris, we are actually on board. And that explains why I'm here, to make sure that we are not left behind anymore. Thank you.
Okay, thank you. Maybe I'll put you on the spot, right? We do have a pending meeting, and that meeting is how can we, like credit guarantee companies, support your risk, your risk capacity, which I think we can do. But tell me, you're saying, banks like Stanbic are late to the party. There's 500 megawatts. Of the 500, have you actually financed any megawatt as Stanbic?
We have done, we've done small installation. So pretty much what we've done is, if I could ramp it up, it's not more than 10 megawatts, what we've done. We've had the sector being supported largely from external funding through the crowdfunding solution that is available. Largely, this has also come in at a cost lower than what commercial banks have traditionally been able to offer. There is a market perception that there are green funds in the market. Commercial banks actually don't have much of this. So as Stanbic, the challenge that we have is how can we make sure we get our hands onto this pot so that then we make sure then we grow our portfolio.
So the message is very clear. Stanbic would like to do more. It's how do you get your hands onto the pot. There's something you mentioned, which Linet also talked about. It's capacity building, right? So JS Solar, you're supporting through technical managers. You're also trying to make sure that all this technical capacity is something you understand as a bank. But I wonder whether, in the country, and I'm going to ask Daktari, is there something we're doing as a country to help build capacity? Do we have strategies that build capacity in this, for the technical understanding or any other capacity to enable financing to flow into the CNI space?
From what I know there's a lot of interest currently, particularly with renewable energies. Having a conversation the other time with NITA, which is our institute training and certification. There is there's some courses developed with also Strathmore Energy Resource Center that are geared towards developing that capacity. We've programs to do with solar installations that are done with particularly communities around and youth as well. Myself and some partners from Germany as well. NITA involved. We've developed or applied for a grant through the Erasmus to do also something similar with our technical institutions, because we realize also there's a big gap in regards to capacity building and enabling, creating an enabling environment that understands and also is able to scale some of the solutions out there. Nationally, don't think there's a strategy per se, but I think is an area that needs to be explored across board, particularly with the sector that I sit in, to be able to not only build the capacity, but make it as more practical and produce as much as the technicians and all these people can be able to support their ecosystem as well.
So my question is to Stanbic Bank. What criteria did you look at when you were issuing out funding for the 10 megawatt projects that you've done so far? And how is it going? And do you think that your rates are sustainable given the kinds of projects that are done for both direct capital investments and PPA arrangements?
I am from Equity. However, I was not supposed to be the presenter, so I wanted to just add on to what you were saying about financiers. Ourselves as Equity, we're also financing. However, on the lower scale, we've done a lot of solar home systems. However, it's mostly on the personal loan side where, yes, customer needs to provide security. And like he said, if we are to take unlike what the ESCOs do, they're able to take the equipment as security for the facility. As banks, we ask ourselves, should the customer default, where do I take that equipment? I don't have a secondary market for that. But we are also in the process of creating a product that cuts across retail, SME, that also handles the manufacturers and suppliers, and also, excuse me, as well as the importers, to see how we can be able to finance each one of the projects, both on the retail side as well as CNI to larger projects. He's mentioned risk share guarantees. I think we were to also have a conversation, but with my colleague. Risk share guarantees come in to assist the bank cover on the security side, where if we can get even up to 75% risk share or on a first loss basis, that would be able to help the banks get into this particular sector with a lot more confidence. Additionally, we are quite reliant on DFI financing. A lot of the projects, particularly the large projects, would require financing of up to 10 to 15 years. But for banks, most of our, would we say our deposits are usually short term, and where we have long term financing, it's probably 5 to 7 years. So we need to have a balance where we can be able to match sort of like for like. So that's where DFI partners come in. But there with my colleague, my industry mate, they are saying that yes, we, as a banking sector, we're actually increasingly looking at those transactions so that we are no longer being kicked out of the bandwagon in favor of the energy service companies. But thank you.
First question, maybe out of curiosity to the banker. How much of your own money have you lent to the 10 megawatts that you have lent to? Is it DFI financing that is lent to banks for onward lending to support the sector, or is it entirely Stanbic initiative? That's one. Secondly, the moderator talked about what Dhamana is aiming to achieve with regard to local currencies for in terms of just payment billing. And my question is to, again, the bankers. Will you be willing to lend in local currency, considering that this is technology that you acquire, importing to the country, so you're incurring hard currency costs? Will you be willing to consider local currency lending? My final question is to the moderator. So, have you provided any guarantees or worked with the C&I companies and provided any guarantee or products? And are there any gaps that you already see that if closed, then would accelerate C&I development from a financing point of view? Thank you. All right, I'll start with the gentleman. I think there are 2 questions. In terms of funding, we've actually funded the entire project. So far we have not utilized any DFI funding for our solar projects. And in fact, we've not just done solar, we've also done wind. So, but for purposes of today, we're just discussing solar. The other question is whether we can lend local currency. And the answer is yes. What we do actually is we align the currency that we lend to your inflows, so that then we don't create a currency mismatch when it comes then to servicing the facilities. So if your receivables are in local currency, then the facility will be in local currency. If it's hard currency, then we finance you in hard currency. So that's how we go about determining the currency that we lend. To the lady, there were 2 questions. The first question was evaluation criteria. And aside from the financial appraisal process, when we look at solar, we primarily look at 2 elements. Number 1 is the profile of the EPC contractor that is doing the project for you. So we need to make sure that whatever we are financing is being done by an EPC with significant experience. So we also look at your portfolio of what you have done. The second key aspect is the quality of equipment. As my counterpart has mentioned, there's bankable equipment. So we have a list of what we call tier 1 equipment that we look at. So if an EPC is doing an installation, we look at what equipment they are installing for you. So we can only finance what is considered tier 1. Yeah, the rest then will not, because of the degradation and the other risks that my counterpart talked about. Your other question was from a PPA perspective, and in this market we've seen a lot of interests in PPAs, and the uniqueness of PPA then has required us to consider the tenor that we advance facilities. So your PPAs are in the region of 20 to 25 years, and you realize a 7-year money will then not support this kind of project. So we are in the process of considering extending our tenors, and I'm glad that Chris is willing to then to give a tenor extension, because once I have a cover that then allows me to kick the tenor to say 10 years, then adequately I can support a PPA type transaction.
And my question is to Equity Bank and Stanbic from the PPA perspective. Most of these foreign getting funding from crowdfunding from Europe and US probably execute PPA contracts with the off-takers. And the issue is most of these off-takers get their revenue or income in local currency. So it's a preference to them to get a PPA in local currency. Do you have plans to give loans to these foreign investors in local currency at probably the same interest they're getting the dollar money, just so that when they send out the PPAs, it's same IRR as the USD contract? That is my question. Secondly, is to all the financials. Recently, over the last 2 years, the cost of PV projects have gone down, probably even 50% of the cost it was some years back. What does that imply to financing? Because that means most of these off-takers can afford solar PV. And therefore, what that means is the PPA contracts will come down and the outright purchase option would increase. Thank you.
Very much. My name is Abubakar, board member of Esak, and I'm from Gulf Power. So first and foremost, I'd like to clarify, this is not a solar conference. It's a C&I. So it covers all technologies, including biomass and everything else that's captive. My first question was, I think it's coming to you, moderator, was, of course, like for myself, I didn't know what Dhamana is. I think there's a little bit more sensation, and that's why Esak, we have such conferences where, we can share all this knowledge. But I was just wondering, what I've asked you is the cost of guarantee against how many bips, whether that actually make sense to both the financiers and the off-taker. I was expecting something about what the lady from Equity mentioned, like the securitization of this assets. Maybe that's a problem, because with the current bills with Kenya Power, you're paying monthly, and Kenya Power can come and disconnect, and there's no assets installations. With the C&I, it's a little bit different, where there's capex involved, and we have to think about in case of non-repayments, and I think Dhamana would help that. But maybe we are working with the EPC or these suppliers and pulling them together and sort of unlocking what they've already financed off the balance sheets might help. Like if someone already has cash flows out of their own working capital that they invested, then they could release some of that. The other point I wanted to make as Esak is that, Cyrus, I'm happy you came, because we've been trying to get you and Equity to come to this conference, even as under members, and now you see why you should become Esak members. Karibuni, so that you're not late again.
Thank you. All right, so there's a question to the financiers. So why don't we pass it over? Aymeric, you want to have a stab at that? Yep.
Sure. So just about the drop in solar panels price, yeah, that's certainly the case. And in 2024, what we've seen as well, it's BESS prices would drop by 20% or even more. So of course that made the project even more competitive to the grid. So for sure that favors the development of these technologies. On what we've seen over the last 12 months in Kenya, but also in other geographies in South Africa or something. Now more and more projects are a combination of solar on BESS. Yeah.
In my view, the price drop is important, but what's is more important is the awareness raising of the commercial banks. Kenya has a unique problem in that, and I know this is about more than just solar energy, so bear with me here. When we first started about solar energy, the donors were pushing us to talk about solar lanterns, Delight and Mkopa, and those companies all lost money, by the way. I mean, Sun King got $150 to $125 million, and they're not returning money to investors. So solar prices are coming down, battery prices are coming down, solar electricity is making more sense. But the first investments that were made in Kenya were for these base of the pyramid solar for the poor. And as much as I think that every person in Kenya deserves a solar system for free, those companies were not generating income. Banks, Equity Bank, you were there. We're supporting these companies and doing grant programs and foundation programs when the C&I market was starting. Kule pesa ilikuwa kwa C&I. That's where the pesa was. But these guys and us Kenyans and the donors were pushing us to do base of the pyramid work. That was not generating a lot of income. So I think I can forgive the bankers because they were putting solar as a foundation kind of NGO type activity, and they weren't giving it the attention of as a serious money making activity. But 5 years later, C&I 350, 400, 450 megawatts of real money being made. That's not coming from Mkopa Solar, which isn't even in business anymore, you know. That money is coming from sales of solar panels for flower farms and industry. So the answer is the price drop is important, but what's more important is getting the banks to realize pesa iko wapi.
Okay, thank you very much, Mark. I'll just have a very quick answer to the question on what exactly is an entity like Dhamana doing, okay? So we obviously only closed our capital 4 months ago, but in those 4 months, and right now we are in discussion with a very large C&I player that is looking to close a 3 billion Kenya shilling transaction. Now, this C&I player has been talking to a couple of banks, but the tenor has been an issue for the banks, and also the rates and the issue of security. Now, as a guarantor, we are not regulated, right? So we don't really have some of the regulatory challenges that banks have. We are able to really extend tenor. And we're doing this by bringing in pension funds into this particular CNI. Now, we do that. So pension funds are very passive investors, right? That's why they're always going to government securities, because they don't have capacity to analyze and understand the risk in CNI projects. So what we say at Dhamana, we have teams, and I have my colleague here in transactions. We understand the risk profile. We understand the anatomy of risk, and we are able to take that risk on. And then we are providing the pension fund a 100% guarantee for P&I for the entire duration. This transaction, if it closes, touch wood, it should close soon, is going to push to about 10, 12 years in local currency. And the differential in rates is about 200 basis points overall cheaper than what they would have gotten from the banks. So yes, this is really going to be a demonstration of what can happen when a guarantor comes, and hopefully we save the day. But we like to work with our banks. Any other question, or we could wrap up? If there's no other question, I will give the panelists 30 seconds each, starting from that side. Just a very quick wrap up. What is the key action point? Your call to action. Just 30 seconds.
All right. For me, what I would say from the conversation, interestingly, I come from a banking background as well. Banks tend to not want to, I think you're just, can I say this, traditionally late to everything. But a lot has changed in the energy. And as Mark says, is that in as much as we are still 90%, there's still a lot of potential that can be harnessed. We have a lot of solar energy that we don't really actually harness. There's opportunities in that space. And some of the things that we are trying to do also is bring a lot of these circularity practices to be able to support this energy generation in real sense in itself. In matters also innovation and research, I think we are able to support that, modeling risk and looking at different risk models with data available. I think as academia and researchers, that's something that we can support the industry. So as we are not just we can help this financial sector to be able to build that capacity in that sense. And also educate the next generation of renewable energy experts as well. Thank you.
Yeah, maybe just to wrap up, I think, as I said before, I think especially for CNI, ESCO need to play a crucial role, because that's what most companies will expect, to have someone providing all the services, in particular the financing. And then for ESCO, it's much easier to raise financing. Maybe on another topic as well, I think in general, not on financing, but for the development and CNI for the next few years, I think legislation will be crucial. Of course, we talk about net metering, we talk about wheeling. Both of these topics, I think, will play a crucial role to develop even further solar, but even energy in general in CNI.
My takeaway is I think we've got a huge potential in CNI, and on the size below 100 kilowatts, there's a lot of room for new players to come in, both in companies and financiers, and that space needs to be explored, and please, commercial banks, have a look at that space. I mean, it's not all big projects. It's going to be smaller projects, but that's going to help build the market for SMEs and consumer households.
From the OEM side, I can say how we'll continue supporting this sector is by continuously providing tier 1 equipment so that we can ensure that these solutions last. We will also be offering capacity building all the way from the commercial banks to the procuring managers and also to the installers to ensure that the industry grows.
All right. from Stanbic Bank, what I just wanted to mention is the just energy transition is one of our strategic pillars. So as a bank, we are continuously challenging ourselves on how we are supporting a sustainable development. We have a mantra, we drive Kenya's growth, and for us, it's how we drive a sustainable growth. So I'm glad that today we are here and looking forward to working with all of you to make sure that we develop our country in a sustainable manner. Thank you.